Hello friends, I'm Rocky Outcrop. Let's take a look at Bitcoin technical analysis together. Thank you so much for joining me. I really do massively appreciate it. And if you hit that subscribe button, all that stuff, you've seen YouTube before, so you know what I'm asking you, and I actually do genuinely appreciate it. What I have here is the 12-hour CME charts, the Chicago Mercantile Exchange. And what we can see here is that the prices have been in this little bit of a kind of uptrend, or is it, area at the moment. And today we've had a bit of a green day, I suppose, probably on the charts. There's that on average. No, it's a bit of a red day, I suppose, actually, so far. But this green candle's coming in here, and does it line up with anything that we've been looking at before? Now, what do we do on the channel? It's FOMO-free, greed-free technical analysis, as you well know already. And we, of course, put all of this junk into context for us, so that it actually means something when we look at it. How about we do that real quick just now and see if we found our feet at any particular support levels or not? How about it? So first thing off, let's just check in with that gap. Was that there? Oh, no, it didn't get filled quite yet. Neither did those ones. What about this little Fibonacci retracement we have on here? Is that of any note to us? Oh, look at that. We came down to the 50% area here, bang on in terms of where we found the support, having had wicks down below it, of course, but these body closes and opens staying above it so far, sustaining itself above that price of the 10,500 area, where we have a Fibonacci retracement there at the 50%, but that's not what actually I'm looking for right now. How about this one? Looking from the August highs to the September lows, the August highs here to the September lows, and what do we see? Well, we've actually come in and been supported by the 236 in there at 10,500. There we go. That adds a bit of context to where we find ourselves, and I suppose as well how important it is to see these levels be maintained. While what we've had on the go over the last wee while is a lower high coming in here. This is a high. This high here and this one, whatever one you want to choose, they're both lower than that one over there. And if we bring up these oscillators down below, you can see that there's a slight upward slope on this, giving you a little bit of a hint as to perhaps what this could mean. If I just take out the trend tool and stick in a trend line going up that way, first off, just to give you a bit of context here, you can see that it's getting higher, as indeed the prices have actually been lower. And what does that mean? Well, that is, of course, hidden bearish negative divergence. And what we have here is a potential sort of Adam and Eve type structure. Now, I'm not a fan of the leading down, being down the way, but there is this little bit of an uptrend beforehand. Really, overall, what we could think of this as being some sort of smaller term time frame double top, perhaps, like if we look down to the 4 or 1 hour, bringing back up the RSI at this point then, and thinking, well, is there anything else that could be happening on the charts anywhere? What do you see here? Well, this is a rising wedge. Now, do you see how that's evolved onto the charts? We've actually even have scope for more downward side movement should it so desire, and staying within the structure of the sort of overall bearish pattern on the charts there. Looking at this area, what do you see there? Well, a more or less doubly top type zone. If this does actually stay along these sorts of lines, then what you could even see is an ascending triangle form out over time. This will be something that no doubt some people in the world will eventually make their way around to talking about. And we have an area up above our heads at 11,000 as being key in terms of breaking past that. That doesn't strike me as too much of a coincidence in terms of how this is shaping up. What do we see down here on the DMI on this 12-hour time frame? Of course, just bringing this up, is that we see that the ADX line has gone down below 12, down below 13 in fact, and turned white, but we haven't actually dropped down below 11 yet. As soon as we do that, what will we see? Only one of these volatility warning zones. Let's see what happened the last time one of these appeared on the 12-hour chart at was a whomp, massive difference in the price volatility, very much resumed here on the go on this time frame. Now, flicking back over to the most recent of price action and going down to the 4 hours, what do we see having happened? And this is something that I did indeed point out in yesterday's video, was that we were getting this volatility coming in here, and then what happened immediately after that? Well, the prices dropped down the way. What will we see happen if that happens on the 12-hour time frame? Probably that with a greater magnitude, would you not imagine? Going over here towards the 24-hour time frame, when was the last time we saw this now warning zone that I've added to the DMI here be become apparent over here. And when did it end? Well, whenever we made that gap on the charts over there, the gap which is visible when I put this drawing back on. So that's what we're looking at the minute. There's technical analysis for you, really using the CME charts. There's other things that we could be talking about, more hidden bullish divergence over there. For instance, we could talk about the MACD and what it's lining up like, but rather than do that, I'm going to jump over to the spot prices and take a look at this setup here that we've been talking about. Now, I kind of pointed out the key levels, and I'll just remove those drawings at the end of yesterday's video. And of course, you can see how neatly they line up with the Fibonacci in the background as well. I'll just remove all of that and make the point that, of course, what we see here is potentially actually a lower high. Okay, that's what that potentially could turn out to be. What do we see here on the ADX down below? Where is it positioned? Well, it's certainly down below 20 and it's come down below 15, but it's not made it down into that real sort of sticky territory of below 13 and 11 or below 12 on there to give us this warning quite yet. But things are certainly picking up towards the downside overall. If things then were to reverse at the point of this getting volatility back in the way, that would be interesting, but of course that's no guarantees that that is going to happen. We have a diminishing volume somewhat in this respect as we see the prices going down the way, but not really. You know, actually the volume starting to go down here, the volume picked right back up, the prices started to go down here, volume picked right back up, dropped down the way, and when they came here all the way down towards the 236 here on this, of course, this Fibonacci retracement from the August lows highs to the September lows. There's other things we could look at, for instance, how the prices have come down towards the 618 zone into this wick and been supported by the 50% in there at 10,500 on the September lows to September highs Fibonacci retracement. And I suppose I could look towards other things too in terms of significant areas such as the incredibly important 2020 low to 2020 high. So the lows of this year to the highs of this year chart showing us that we're actually below the 236 when the prices go below 10,420 blaze it zone. Those are the key important areas for us right now. Looking at this chart as well, do we see a similar sort of situation? Well, it's not a rising wedge. What we can see is that there's this convergence here between this lower high and not the hidden bearish divergence that you see on the CMEs. What you also see though is this downward slope that we've had here, 3 of them, and you also see this upward slope here that we've had 3 of those, and we're coming towards the end point of this, you know, this sort of the shit or get off the pot, if you will, area for this symmetrical triangle that's available to be charted out on the RSI. Looking at the negative cross that we've had on here, it is during chop, so we're waiting for confirmation on that. And of course, confirmation comes in when we move past those areas that we pointed out before, and just kind of putting that back into context again, I suppose, in the most easy way with the towards the top side, let's say 10,900, and towards the downside, let's say 10,100, and of course then you'll very much know where the next stops could potentially be on the charts for us. Looking here, the top side is going to have to be, if we manage to get past 11,100, which is obviously the key inflection area towards the top side. Currently, you're looking towards the right hand shoulder of this head and shoulders area here, and if we go down the way, then of course you're looking down towards where we had that gap at, and of course where the point of control would be. If I had the VPVR up on the screen here along this line here, where we have the horizontal serrated line with the potential in terms of just this little bit of flux right now, where we find, like, you know, where we had the reversal, now we're asking which way is it going to go? Is it going to trend? You know, this was a short to medium term reversal pattern. This is, if it's short, upwards; if it's medium, downwards. Then we have, you know, this area down below. It all adds together, and that's how you do your technical analysis. Thank you so much for tuning in today. I really do appreciate it. I'm actually going to leave off here now with this thing. There are a couple other points that I will make just before I go in terms of drawings that I haven't actually pointed out. For instance, the pitchfork, which is the inside pitchfork, we saw the support coming in right there at the median line of it. Movements down below it take us down towards the sub 10k area, just to come in here and put in what could potentially just be a lower low if this is another sort of intermediate term time frame trend, or indeed if we go to complete the sort of the high, the low, the lower high, and the lower low, with this simply being an in-between stage of that process, it takes us down towards the low 9,000s, moving up away towards the top, you've got the 11,000 area, of course, of key importance. Then thereafter, 11,500 or so. Moving that pitchfork off and putting the shift pitchfork back on, you can see how crucial this lower warning line has been in terms of support for us. There are various extensions to this that we've been looking at, but just purely in terms of the top side, 10,800 is going to be like the minimum you're looking for, because really you need to get above 10,873 to take out that 236, and then down the way, taking out the 786 Fibonacci retracement at 10,100 is going to be crucial for the bears, and that is beautiful technical analysis. I hope you have a really fantastic weekend. Look out for how the CMEs close today, because it's Friday, and then of course how they perform come Monday, and whether or not we're still within the bounds of this as being a particular potential pattern to evolve out the way. If it were to be, and of course looking at this at 24-hour time frame, then gaps down here, for instance, could be refilled or just undone immediately to put us back into this structure. And of course we can disregard this really if we do push down too far outside of this zone for now, and instead consider it to simply be an Adam and an Eve with a measured move that could take us down past our previous lows, and that would simply then just result in a classic trend. Boom! That's how you do technical analysis. Thank you so much for joining in today. Really, this should help you trade. I really appreciate the view. Share this video with your friends, hit the join button, hit the subscribe button if you can't afford to hit the join button, that's totally fine, and share it on Twitter and Facebook and all the rest of it, because YouTube ain't going to be making this channel grow. That's on us. Currently we are YouTube's best kept secret when it comes to technical analysis. Let's not keep it that way. See you next time.